is going to be approved. They are going to be approved first. I still believe they're going to be approved only BlackRock. People push back on that one, but and a couple others did say, well, there's no source. It's likely untrue. But the reality is, the reaction to that news is totally legit. I mean, in the sense of, yeah, when this is approved, there's going to be increased demand. And it's not if, it's when. So when this is approved, there's going to be increased demand, a lot of increased demand, and prices are going to rise. And yet here we are on Friday, recording this on Friday, and prices back up a little higher than where it was. So people have been saying, you know what, it's coming. And I think that's interesting.
Yeah, this is a perennial question within crypto. Is this priced in or is it not priced in?
In the 20s, in the 1920s, in the roaring 20s, stuff was not priced into equities. There was lots of manipulation. There was lots of scams. There was lots of big movements on little things, and then that changed a little bit, and then by the 70s and 80s, there were still things that weren't priced in the sense that you had message boards. I love message boards, and the whole famous thing of Michael Saylor's MicroStrategy was totally manipulated, right? From $3 to $330 back to $3, all by these message boards. I mean, he got fined, people got fined. I think some kid might have gone to jail. I can't remember. But I mean, so markets mature and media coverage matures, and the quality of analysis. Now that, and again, it's not poking anybody in particular, but the quality of analysis in our space, in fact, if I claim to be part of the digital asset space or the crypto space, it's still working itself to a level of high quality. There are some great organizations, there's some great research organizations, but by and large, stuff gets thrown out there, like what happened on Monday, right? So you were telling me before we got going that I thought the whole thing about the intern was a joke, right? I thought they were saying, oh, it was an intern. Well, I guess it was an intern that, read something on a chat group or a chat room and posted it with no source. That's not what media does, right? Media is to have a source, and then people just fly into it and say, oh, okay, I gotta buy. Well, where's the analysis of, well, what does this mean? Eric Buckingham did this, right? He actually said, okay, there's $30 trillion of assets that right now are prohibited from investing in Bitcoin, right? The firms have said, the RA firms said, nope, can't own it. When there's a BlackRock ETF, they're going to have to let people own it. They're going to have to let their customers buy it. So let's say it's a 0.1% allocation. That's $30 billion. Well, but Mark, 30 billion on 500 billion isn't that much. Well, but 500 billion doesn't trade. There's about 100 billion that really trades, and it's even smaller than that on a daily basis. 30 billion will move the price. We saw that on Monday. But what if it's 1% allocation? Which would be a prudent allocation, which people have. There are a lot of people that have 1%, 2%, 3%. Some have lots more, but a prudent allocation would be a 1% position, like a gold at 2 or 3 or 4%. So that's 300 billion. 300 billion on a $500 billion asset. And that ain't priced in. That is, I'm on the record, that is not priced in.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. With a giant spotlight on Bitcoin ETFs, Yusko highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
In real media, Larry Fink, right, the president of BlackRock, went on CNBC. I guess some people don't call CNBC real TV, but I think it's real TV. And in the afternoon on Monday, and basically said, rumor, not fact. We haven't been approved. We're still making. In fact, 2 days later, it was reported that they had made the comments back to the SEC, because October 17th, Tuesday, was the day on which either it had to be approved or they had to say, hey, you have to give us more, and there's another 90 days. So that clearly happened. But Larry came on TV and said, amongst other things, well, really, things are pretty tough out there and people are afraid. And so there's a flight to quality in treasuries, gold, and crypto, which Bitcoin, crypto, people get mad, but Bitcoin is a cryptocurrency. I mean, it just is. But, and there's like, he means Bitcoin, not crypto. Whatever. Yes, his application is for Bitcoin. Maybe he's not allowed to say the word Bitcoin because he's in the I don't know. I don't think he really doesn't understand. He's a pretty smart guy. But it is demand for other cryptocurrencies as well. But bottom line is, Bitcoin is the safe haven. Other things are you can argue whether other things are good, bad, or indifferent, but Bitcoin is digital gold. There's this conundrum, right, where things look pretty good from an economic perspective. If you look at the economic data, we had 2% growth. Now they're saying we're going to have 5% growth. The retail sales thing, part of that was oil prices went back up and gas prices went back up, and a big chunk is gasoline. Okay, fine. That's not going to play well for the next election, by the way. If oil prices are over 100 and gasoline prices get back to $4 at the pump. So expect something. And the debt is a number that's incomprehensible at 33.5 trillion with a T. Okay. So that drawdown is the percentage drawdown. That isn't the actual drawdown. That actual drawdown, orders of magnitude. But now you got to inflation adjust, fine. But I'm willing to go on the record, probably without doing the math, not probably, without doing the math, but I'm probably right, that this is bigger, even inflation adjusted, like orders of magnitude bigger. And it's just because the law of large numbers and the decimation in places that have not bubbled to the surface yet. I mean, it's terrible.
So,
terrible.
Where do you think those places are?
Regional banks. There's a whole bunch of banks that are insolvent right now. Completely, totally insolvent. I mean, done, board them up, distribute what's left. But there's this government program that says, no, you're fine.